and welcome to your weekly installment of the GoNoGo Show. My name is Tyler Wood. I am a CMT charter holder, chartered market technician, and as always, I am joined by Alex Cole, the Chief of Charts here at GoNoGo. How are you doing, my friend?
Doing very well, thanks.
Fantastic. We're going to do something a little different on today's show, and we're going to look at using no-goes in a trend continuation context. But as always, we like to start this show with a top-level overview of the markets that we are all investing and trading in. Alex, let's go to our GoNoGo heat map, looking across the asset classes.
Yeah, lots of Go trends. Go trends are back. We see the equity market in the top panel, strong blue bars as we're at all-time highs. We'll look into how that's sort of thin leadership as we get into the sectors in a little bit, but the domestic markets as a whole in strong blue Go bars. Treasury bond prices are in a strong Go trend. Commodities have chopped and changed once again, are in strong Go trend for the latter half of this week at least. And then the dollar also picking up new goes after a period of uncertainty in the lower panel.
Absolutely, and those are absolute trends of the price action of each of those indices. And let's dive into them individually.
Yep.
Let's start with the S&P 500, our benchmark index for U.S. equities. Just taking a look at this trading at all-time highs.
Yeah, and it was a beautiful bounce off the zero line. We wondered if this Go trend would have legs, and we saw it correct. After the counter trend correction icons, we saw the weakness reflected by the aqua bars. But during that time, the oscillator fell to zero, so we were going to look to see in which direction that resolved. And of course, there was a go-no-go squeeze, and then the oscillator back in positive territory. And that gave us this trend continuation icon here about a week or so ago, and now we've, of course, moved to higher highs again.
You know, several weeks ago, a month ago, we were on David Keller's The Final Bar on Stock Charts TV, as the S&P 500 had entered no-go conditions. And I think this is a good opportunity to talk about multiple time frame analysis. The idea of shorter term charts giving us pullbacks within an otherwise established uptrend on the longer term is one of the core concepts that you're going to learn in the CMT program, or that as technical analysts we have to keep track of. So the question Dave had asked me was, okay, on this daily basis, S&P 500 is in a no-go. What does that mean for your investment rules? And the answer was, if you are executing trades, if the daily time frame is your executing time frame, then by our rules, that's the signal that that trend has no longer held. In fact, has reversed into a downward direction. None of us ever know what there is for us on the far right side of the chart in the future, but by staying disciplined and following those rules, we can avoid major drawdowns. So now that we know in hindsight, on this daily basis, market recovered and re-entered the Go trend. Alex, if you pop this out to a weekly chart, we'll see that that pullback in April just showed us the weaker form of the trend conditions, still in a Go trend. And this is the reason that we built the sensitivity into the model, was that we all want to know what is a pullback or a buyable dip within an otherwise established uptrend, and what is the beginning of something much more substantial. So the weekly time frame shows that we never left trend. And Alex, if you drop that to an intraday chart, let's look at like a 39-minute bar and then zoom back to that April time frame. We saw that the destruction was much deeper, had been in a no-go trend for quite some time intraday, even though on the daily basis we saw about a week of contraction, counter trend consolidation. So for all of you users of GoNoGo charts, the time frame matters, and using multiple time frames to not only have your executing time frame, your analytical time frame, but then also where you're going to place your trades. You might drop into an intraday chart to get a good fill on establishing your positions. So a little instructional information there about how these GoNoGo charts can help you. Alex, let's move over to the U.S. Treasury rates. Let's take a look at the 10-year on the TNX.
Yeah, and Treasury rates have been doing their part to sort of help a little bit by remaining in the no-go trend. We saw that sort of strong relief rally, but we never got out of the amber bars. So we went back into a no-go, and now, of course, making slightly lower lows in the no-go trend with the oscillator below zero.
Absolutely. And if we look at that on a weekly time frame as well.
Yeah, the weekly shows us that we're just sticking around in this range of higher interest rates, especially from what we were used to a few years ago, but hasn't got back close to these previous highs here. We're getting stuck, just trading around these levels, and now we've gone and painted another amber bar. So there's some uncertainty on the longer time frame, but certainly not rates racing either higher or lower on the larger time frame.
Absolutely. Big news last week, the European Central Bank cutting rates for the first time in this cycle. A lot of speculation about whether the US Fed and Jerome Powell will follow suit. All right, let's move on to the chart of the US dollar. UUP is the ticker symbol we like to use at GoNoGo. Trying to use ETF proxies so that we can also get a sense of the volume at play on these trends.
Yeah, and this is the weekly chart, so we've already got this up. You can see how we're consolidating above levels that were resistance before on the weekly chart, and we found support again at zero. So on the larger time frame for the dollar, before we jump down to the daily, you can see that we are still in trend and that we're seeing signs of trend continuation now as GoNoGo trend paints a stronger blue bar. And if we move it down to the daily, you can see that it's been an absolutely incredible bar today with, you can use your other technical analysis to know that this is probably a bullish engulfing, with all of today's range encompassing to yesterday's, as we find ourselves back in positive territory again on the oscillator as well.
Yeah, most of the week. And here we are midday on Thursday. That last bar is still active until the close today. And for all of you weekly chart users, those will still be active through the end of the day tomorrow. With GoNoGo Charts, a live bar, so particularly if you're using longer time frame charts, it in high volatility environments may change the trend conditions. Those colors may change, updating in real time according to the intraday or intra-week price action. But once the session is closed for the day or week, those bars are never repainted or adjusted. That is just the fact of where the markets are at. All right, let's move on from the US dollar. Let's take a look at gold.
Yeah, so gold's been interesting. We know that gold historically is at highs that are above the neckline of that decade-long pattern that we've looked at so many times over the course of the last year or two. But in a daily chart here, we've had this really nice strong run, and we can see that now we've struggled a little bit. We saw some amber bars come in. We saw the oscillator break below zero, retest it, and get rejected. And now on a daily time frame, we're painting no-go bars for gold. So this level here that's most likely going to offer some support will be very important as we get down to it. But a no-go trend now on gold.
Absolutely. And moving on from gold, let's take a look at US oil.
So US oil has been much further ahead in the no-go trend than gold, and entered it several weeks ago now. And you can see that we dropped really quite sharply to new lows, but have now rallied back into a level that there may well be some resistance from previous congestion. So we're going to have a look at the oscillator. We're at the zero line. There's a squeeze building, and we're going to watch to see in which direction the oscillator goes. If it goes back into negative territory, we're most likely going to see price roll over and stay in the no-go trend.
Absolutely. Now, when we think about equity investing, a lot of us suffer from a behavioral bias, the home bias, that we only like to invest in the country in which we reside. Here in the U.S., that has paid investors dividends for decades. But Alex, let's take a macro view at equity indices around the world relative to the S&P 500. There have been some pretty amazing breakouts in Japan. We've seen a lot of strength in India. We've seen periods of strength in Europe and the UK. This heat map is a relative strength heat map. So we're looking at the trend conditions of the ratios. Each panel is a ratio of another country relative to the United States. Right now, global diversification of your portfolio is not adding alpha to your investment performance. So we look at all of these countries relative to the S&P 500, and all across the board, dark purple no-go trends. So clearly the US is the outstanding outperformer. So let's go back to our sector rel map. Let's get under the hood of the S&P 500 and find out what is establishing such dominance of the US over the rest of the world.
Yeah, and this was interesting because the US is outperforming pretty much everywhere, as we saw on that last map. But the leadership within the US is pretty thin. And that's what we're looking at here. Just the top panel, the technology sector now in a relative go trend to the larger index.
It's a bit of rarefied air up here at all-time highs, and very few companies participating in that general rally here in the U.S. Alex, what was interesting to me this week was the rollover of the communications sector relative to the benchmark index. Again, we're using those ratios, each of the 11 sectors relative to the S&P 500 benchmark. Let's go through a couple of these and just look at their absolute charts for a second. So start with the XLK, and the important thing for everybody to understand about relative strength, relative performance, or ratio charts is that in absolute terms, these individual sectors may still be in uptrends. They're just not moving as high, as fast as the benchmark index. XLK, far and away breaking above relative outperformance of the benchmark, but also on an absolute basis, the tech sector has been a phenomenal performer this week as well. Alex, could we pop that out to a weekly chart?
Yeah. So the weekly trend of XLK just looks really strong. I mean, of course, we know what's sort of dominating this is, especially when we look at the breakdown of the S&Ps, a lot of mega cap stocks dominating in terms of trend, and in the tech sector, that's no different. So the daily chart of XLK looking a lot like what we'll see if we looked at something like Apple, but the weekly chart looks very strong. Higher highs, higher lows, oscillator finally supported zero. And we just broke, of course, this week we're breaking higher again.
Absolutely. Let's move on down the list. Take a look at communications, XLC, which was in a period of relative outperformance and has now dipped below the performance of the S&P 500. Interesting point of decision there at the zero line for the oscillator.
Yeah, this is going to be interesting because being in a very strong go trend, we saw the correction as we saw across the rest of the market, and then we entered the go trend again, and we made new highs, and now we've sort of pulled back a little bit from this counter trend correction icon, and we're at the zero line on the oscillator. So this may well be something that finds support, and who knows, maybe we move higher again for XLC, but not higher at the moment. Whereas we saw that XLK was at highs, and so was the index as a whole. So definitely consolidating, pulling back a touch, but this is going to be very important to see if we find support here at the oscillator at the zero line.
And still a bit of room to fall to the next major support area, correct?
Yeah, a little bit. A little bit, yeah.
Excellent. Let's move on. Let's take a look at some of those cyclical sectors that were strong outperformers at the beginning of 2024. Let's take a look at XLF, the financials.
Yeah, XLF. Now the story's changed a little bit. So was in a go trend, but has failed to hold on to it. And we see that the oscillator broke below zero, retested it, rode the zero line for a few bars, and then fell away again into negative territory. So now the GoNoGo trend indicator has recognized the changing technical environment and is painting a first few pink no-go bars. So a little different. We see this could well be now a lower high, and we're threatening to set lower lows as well.
Absolutely. Let's dive into a couple names in the financials sector of the market, and just take a look at what might be dragging this down. Why don't we pull up MasterCard?
Yeah, MasterCard has been struggling for a little bit longer than the rest of its index, or rest of its sector, I should say. So we saw a really, good, strong trend. We talked about how these sectors were dominating for a while, but then they rolled over in terms of relative performance. Well, MasterCard rolled over in terms of absolute performance as well a couple of months ago now, and we're seeing that no-go continue. We saw some uncertainty as the oscillator rode the zero line earlier this week, but sort of trend has been reconfirmed, and we see a strong no-go bar today with the oscillator back in negative territory.
So as responsible investors, right, we want to build our watch list of things that could make it into our portfolios. We want to know what we are overweight, and we also want to know what we want to be underweight or even short. So for those of you who are looking at hedge positions to balance out an S&P 500 equity exposure at all-time highs that may have that certainly has some narrowing breadth characteristics, some of these new emerging no-go trends on the absolute price action for these sectors might be an area to go look into underweight positions or even hedge positions and shorts. Alex, the construction of GoNoGo charts works the exact same way to the upside as it does to the downside. So let's stick on this chart of MasterCard for just a second. And what I notice about the end of the Go trend back there in April, we made a max squeeze, broke higher, and then came back into the squeeze. GoNoGo oscillator stuck at zero, volatility narrowing, the action of the price movements getting narrower and narrower. And when it finally broke and resolved lower out of that squeeze, we headed into negative momentum. So the GoNoGo oscillator is ranging between 0 and -6 since that time. And if the investors out there are thinking about trend continuation in NoGo charts, whenever you're able to bring that back up, the zero line can act as a resistance area for momentum, right? So once we've established a no-go trend, that negative momentum, when it comes back up to the zero line, is likely to find resistance. And there we saw multiple tests of the zero line, and those red circle icons on that chart of MasterCard give us that trend continuation. The same way we would use it in holding through an uptrend, we can hold through downtrends when we have those quantifiable confirmations that that was a relief rally, and there's a chance for adding to our short positions. So great no-go chart there for MasterCard. You know, the one that we always pull up, Alex, Jefferies, JEF, incredible investment bank, sales and trading team, lots of friends over there. And Jefferies has also entered a fresh no-go trend.
Yeah, a little different from MasterCard, a lot more like the index, or the sector, I should say, a lot more like XLF. So experienced its return to a new go and made a higher high, but then was unable to then hold the support levels that we saw when the oscillator was riding the zero line. Broke down out of a max squeeze into negative territory, and now, of course, the indicator painting no-go bars.
Absolutely. All right, let's get back to our sectors. Let's go through a couple more, the absolute trends. We saw everything else underperforming the benchmark. Let's pull up XLE, the energy sector of the S&P 500. And here we see even more degradation of that at one time, strong go trend.
Yeah, XLE falling away now for some period of time. And you can see how cleanly it's been rejected by the zero level when we look at the oscillator panel. So every time we had the trend change and the trend sort of uncertainty happening here, when we are staying at or below zero, that is not a good sign. And so then when we finally rolled over into the no-go, now we're seeing quick signs of trend continuation.
Absolutely. Every time it retests the zero line from below, we're getting that quantifiable confirmation that the no-go trend has a chance to continue as momentum rolls back over into negative territory. All right. Let's pull up another few individual tickers from within the energy space. Let's start with ExxonMobil, XOM.
Yeah, ExxonMobil not looking great. You can see that we've rolled over into the no-go. We've seen signs of trend continuation to the downside already, with the oscillator getting turned away by the zero line. So, you know, similar picture to the sector itself there. No surprise with how big this company is, but we've also fallen below the levels here that could have been support, and now we've made a new lower low on purple bars.
Brilliant. And let's do one more. How about Valero, VLO?
Yeah, VLO, similar story, maybe a little bit longer of a no-go already. From this ultimate high at the end of the go trend here, we saw a lot of weakness with all of these aqua bars. And once the oscillator wasn't able to hold the zero line, it was kind of imminent then that the no-go is going to take hold. And that's what we're looking at now, some fresh trend continuation icons to the downside, oscillator in negative territory, and price at new lows on strong purple bars.
Yep. Now, these are some of our favorites. They were leaders in the market earlier this year. If there's one certainty in the markets, it's that change is a constant. And we have to be adaptable, right? Just because they added value to our portfolio earlier in the year doesn't mean that they don't make great short positions now. So Alex, let's zoom back out. We know the technology sector is leading the US equity markets and leading the world. The US does dominate in that innovative large cap technology space. We certainly have more companies to choose from than any of the other equity indices. Let's talk about what everybody's talking about. Let's pull up a chart of Apple.
Yeah, what a week.
I think this one's going to be in every trading textbook known to man for the next decade to come.
Yeah.
Let's zoom it out a little bit. Just pull in a little more of that history. We know we were coming up on a resistance area for Apple. Really big news with the integration of AI into their platform. And frankly, I couldn't even begin to explain to you why their products are so innovative. But using the market as our best fundamental analyst on the planet, distilling all of that information, it's certainly pointing to some pretty positive signs for Apple with that huge breakout.
Yeah. And to your point about multi-time frame analysis, we look at the monthly chart of Apple a lot, and you can just see how many times once we hit new highs, that previous level becomes support so often. So we make a high here, we come down to support at prior highs, same thing then happens here, same thing happens here, again here, and now we're looking at eventually, if we can consolidate above these levels, then this could become support for Apple going forward. So really quite a strong picture. And going back to the daily chart, you can see really how incredible those 2 days were. But on the monthly chart, it really just looked like a continuation of business as usual for Apple.
Right. And let's go back to that weekly where we saw a string of amber neutral bars preceding this this move. Now, there's a couple things that I think are helpful to point out in terms of chart construction. On a weekly time frame, Apple had rolled out of its go trend, painting some neutral, and then entered a no-go trend in March this year. Many of you are going to be much more familiar with the legal battles and IP protections and all of the things that were dragging Apple lower. When the trend continuations entered that neutral phase, and we saw a string of weekly amber bars, with all trend following indicators, we're looking at historical prices, we're looking at things like moving averages and comparing current price levels to where they have been. So it's a lagging indicator. What you want to look to is your leading indicators to give you a sense of what direction that is heading. And so in the lower panel, GoNoGo oscillator was signifying heavy volume and breaking through that zero line, going from negative momentum into positive momentum, and then screaming higher to overbought positive momentum on heavy volume. Those are all your signs that there was really a lot of constructive evidence for Apple, even through that period of neutrality. Trends are going to take shape first on the shorter period charts, and then show up on our longer term charts. But I think the overall or broad-based major trend of Apple, when we're looking at that monthly, was never disrupted, maintaining goes the entire period. So great textbook example that I'm sure we'll all be referring to for a very long time in terms of preparing for breakouts. Alex, to close out our show this week, let's take a look at the crypto RelMap. For those of us who are interested in cryptocurrencies, seeing how they are playing out relative to our other investments in the portfolio, like equities, fixed income, commodities. Interesting moment here with Bitcoin and Ethereum just tracking neutral trend performance against the US equity benchmark. Less of an outperforming view right now for cryptos. And let's close our show. Well, see that the Ethereum chart just there on the second panel just switched from an amber neutral to a weak form of a go trend. And that's what I was talking about earlier. While we are still in the live trading session, those will adjust in real time to the activities of the day.
And we were talking about these outperformance over the last couple of weeks, but the gap higher from equities has really changed things on this relative outperformance. So we might well see amber followed by go colors again, depending on, of course, the relationship between how fast equity prices move higher versus what, of course, the cryptocurrencies are doing. So still in go trends or period of uncertainty, and like you said, flashing between the two.
And let's pull up a chart of Bitcoin itself just to close out today's show.
There you go, and you can see why the relative outperformance is not in a go anymore. Really moving sideways, although hanging on to the go trend. So very, very interesting. Lots of resistance above here. If we can get above that, of course, that's going to be positive. But lots of work to do to get above that.
Yeah, my eyes immediately drawn to the GoNoGo oscillator. Now, having retested the zero line after breaking out of that little squeeze, and to the downside, with heavy relative volume picking up as we're trading a little lower. That's it from us this week here on your GoNoGo show. We look forward to seeing you every week, talking through the markets and helping you understand how to identify trends, removing analysis paralysis from your process, giving you more time to construct that mosaic, that top-down approach from the asset classes to the individual sector groups, the industry groups, and individual securities. If you have any questions about GoNoGo Charts, please email us, info@GoNoGoCharts.com. And, tell your friends, subscribe to the show in the link below. And we'll see you again next week. Until then, take care of each other and trade them well.